Hey traders, Andy Demi here from the London Trading Institute. Hope you guys are well. So in today's video, I want to send you a quick update on one of the most recent videos where we found a 500 pip opportunity in cable, okay, on cable. And it's actually just reached our level. And I want to kind of show you what might happen. Also, we want to speak about a little bit about the Fed meeting and how that might impact this position, and also how you can actually trade this if you haven't taken the trade. So with that being said, guys, I'm going to get straight into this update on the last one. And if you want to check out the original video, I'll link it up in the top right hand corner, and I'll also put a link in the description. So make sure you watch this one through first before I go in and watching the other one. But this one is the most relevant right now. As of today, Tuesday, the 15th of March, I believe. Yes, it is. So let's get to it, guys. Now, if you are new to our channel, guys, please hit the subscribe button and the bell button so that you get notified when we update our videos. And if you could do us the kindness of pressing the like button, that would also be much, much appreciated. It just helps us get our videos out to more people. It just shows YouTube that you're enjoying our content. All right, guys. So GBPUSD cable, as it's well known. Where are we? Well, if you have a look here, guys, I'm looking at the daily chart, and you can see we've got a lovely channel that's been going down, 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 channeling down, but it's been reacting really nicely at these support areas. And I was kind of speaking about, you know, the 130 mark on the video that I was just describing as being the area where demand is going to come into the market. And you can see it's actually happened exactly like that. Demand has come in. And now it's a case of like, well, okay, well, we predicted that. And if I just kind of plug in my Fibonacci, guys, I'll just explain to you what you can see here. So what this is basically telling me, that the one that you want to focus on is just the most recent swing. So you have that, this is your first A, this is your B. The market did a big move down, and then it did a deep, deep pullback into this kind of gray 88.6% Fibonacci retracement, which gives us a target right here. Okay, and you can see that the market has basically gone there. It's just gone slightly lower, as sometimes happens, and now it is trying to bounce up. Okay, which is essentially what we would actually expect from the market at this stage. Now, the thing that we want to kind of dwell upon now is, well, right now, you know, it's a day before the Fed meeting. And for those that don't know much about the Fed meeting, it's basically a decision on interest rates. You know, if there's an increase in interest rates, a hike, as it's well known, then that's going to obviously potentially affect the dollar. Now, what you must also bear in mind, guys, is it's what's priced in to the market. Okay, so people are aware of what's expected versus actually what ends up happening. So, for example, right now, the market's kind of priced in a 0.25%, you know, 25 basis point increase in the USD. Now, if that actually happens, well, I don't think there's going to be too much of a reaction. It might even be quite bearish for the dollar, which actually might actually push this higher. Why might it be bearish for the dollar? Well, people are already expecting that. Now, and there is absolutely a case for a higher increase, or at least the sentiment of it. So, you know, one of the biggest things, guys, is, and I spoke a little bit about in yesterday's video as well when I was comparing Bitcoin with gold, and you can check that video out as well. I'll post a link in the description as well on that one, because that one I think is an interesting video. But in particular, if we just kind of focus here, if the Fed basically talks a little bit more about being more aggressive with interest rates, because there's a lot of chaos going on at the moment, you know, with the war, you know, with hyperinflation, and it's very difficult balancing at, you know, when the central bank is deciding whether to raise rates aggressively or take a softer approach. But if there's a sentiment that, hey, or a hint that the rate is going to increase rapidly throughout 2022, that's going to be very, very bullish for the dollar. And the most likely scenario, guys, is we're going to break through here. Okay. we're going to break through this 130 barrier. And if the 130 breaks and actually closes below, that's an important thing to understand. It's got to close below, right? It's got to close below 130. So if for example, tomorrow we go and close below, well, now that channel line is broken. And we might start to kind of look at a few different things and try and find some support areas. For example, we might be able to connect these points here, okay? And that could be a point, like if I just make this a different color, if we make this purple, so, and then that we could look at saying, hey, maybe the market's now going to go down a little bit lower. Maybe it's going to react here, this Fibonacci zone, because you've got a double Fibonacci there, which would be roughly speaking about 128. And that could be a potential. So it could push down and then demand comes in. And if it closes back above this channel, that's called a bear trap. And this here then becomes a buy zone for us. But right now, what are we going to do? Well, right now, look, if you're not in the trade, if you've taken the trade, then you'll probably want to just take some off the table before tomorrow's meeting at 6 p.m. Okay, 6, and then 6:30 is the conference. So, the UK time. You probably want to, target these levels here. Maybe back up this moving average towards that 131. Take some off the table. Take some risk off the table because it's going to probably get quite violent. Or close the trade out altogether. Or you may just want to close out, say, for example, 0.75%, leave a little quarter on there just in case, it really just, explodes higher. But otherwise, you could just limit your risk on that and just lock in some profits. Now, if you want confirmation, so if it's a bearish sentiment, a dovish sentiment for the dollar, then most likely we're going to see, cable go higher as expected for that 500 pip move. In which case, what you can do, guys, is you can simply draw your down trend line and you can wait for a break of this down trend line and this 50 moving average. Okay, let's take out the high as well. So we create that higher high. So at the moment we have this kind of sequence of lower lows, lower highs. Let's take out that high, then wait for that pullback. Yeah, maybe even like could even be like a head and shoulders, inverse head and shoulders, and then look to take it higher towards that 500 pip target. All right, guys, that's all I wanted to cover today. Trade safely, manage your risk correctly, guys. Follow a set plan. That's the most important thing and the most important advice I can give you. Don't over leverage, especially be careful. Tomorrow is a big day potentially for the markets with the Fed meeting, and it's going to affect not just currencies, it's going to affect all assets, including gold and Bitcoin. So do take care. So that's all from me today, guys. Hope you enjoyed it. Check out the other videos. I'll put them in the description and I'll link them at the end of this video. Otherwise, hit the like button, subscribe to our channel, and head over to the Crypto and FX Traders Club to join our Facebook group if you're not already in it. I'll also link that in the description. Take care, everybody. Good trading to you all, and I'll catch you again soon with another video. Take care.